So high oil prices percolate into every part of the economy and cause inflation. Now, when inflation happens, typically then central banks tend to raise interest rates.
Right.
That means you and I have to pay higher for our mortgages, for our car loans, or corporates have higher borrowing costs.
Yes.
They tend to then hire less. They tend to cut costs.
Hi, I'm Andrea Heng, and this is Money Talks Explains. Now, Money Talks Explains is where we have a burning question, and then we go find an expert to break it all down for us. So one of the headlines that's come out from the conflict between Iran and Israel, or any kind of geopolitical standoff really, is how oil prices are affected. But have you ever wondered why? What is the correlation between war and oil prices? Well, that's exactly what we are getting Vandana Hari to do for us today. She's founder and CEO of Vanda Insights, which monitors the global energy markets, and she's going to help us connect the dots. Hi, welcome to the show.
Thank you, Andrea. My pleasure to be here.
The pleasure is all ours in hosting you. So, set the context for us here, Vanda. Oil is something that every single person needs, more than we know, actually, whether we see it or we know it. Why is this so?
So oil is the lifeblood of the global economy. When we look at the world's primary energy mix, 82% of it is what we call fossil fuels.
Right.
The remaining 18% or so is renewables and, the more new energy stuff. Now, oil alone is the single biggest component of that energy basket, 32%. And it has reduced, the share has reduced a little bit over the past 6, 7, 8 decades, but not by that much.
Okay.
And for the foreseeable future, the coming decades, it is expected to remain the primary source or the biggest source of energy in the world basket.
Okay, so when we read about the oil market, we often hear the names OPEC, OPEC+, OPEC spelled OPEC, which stands for the Organization of Petroleum Exporting Countries. And they get mentioned a lot, right? So who are the biggest suppliers and why are they so influential to oil prices?
So OPEC, and which has in recent years become OPEC Plus, because about 10 members that were not traditionally a part of OPEC. Now, OPEC has been around for, I think, at least 6 decades now. So they were joined by these 10 other countries, the biggest of which is Russia.
Ah, okay.
So they came to be known as the non-OPEC collaborators of OPEC. Now, as a result of this collaboration, now we have this group of countries which account for nearly 40% of global oil supply. So that is a big deal.
Okay.
So whatever decisions they take with regard to their production policy is obviously critical for the supply-demand balance of the markets.
As with any other trade in the world, how do the supply-demand dynamics of these specific players affect us, small guys, the consumers at the end of the day?
So let's just go back about 5 years to 2020. When COVID happened, and we all know what life was like and how our roads looked, and transportation came virtually to a halt.
Yeah.
Road transportation, air transportation. Our lives didn't stop. We were still getting air conditioning, cooling our houses, warming our houses, electricity and what have you, but we did stop moving around, right? That led to a huge collapse in global oil demand, consumption essentially,
For sure.
almost overnight. And that's when this group stepped in and said that, okay, this is not a good thing. Short, medium to long term, such shocks are not good for producers because, well, first of all, if you continue producing, prices will continue going down,
Yes.
right? Because there's no demand for that oil.
Correct.
You're going to run out of storage. Where are you going to put that oil? So this group played a vital role in rebalancing. So overnight, they decided they're going to slash production by about 10 million barrels a day, and which rebalanced the markets. Prices gradually came up, and the world gradually getting back to normal was obviously on the demand side was a big factor.
Yeah.
But the immediate step that was needed to balance, to save a lot of companies, oil producers essentially, from going bankrupt and perhaps never resurfacing, this group played a big role. There's a lot of controversy around it.
Yes.
There are a lot of fingers routinely pointed. It gets labeled a cartel. It gets blamed for or pinpointed as this is the group that is essentially trying to keep oil prices higher. And the very critical role they play in balancing supply with global demand, and which they're able to play, especially now, accounting for 40% of supply. Had it been a smaller proportion, they may not have been as influential.
I wanted to talk to you about that. The prices that they are at now. What's going on here? How is this group managing this situation with the oil prices vis-a-vis supply and demand?
So when you look at the world's major oil producers, right? So Saudi Arabia, Iran, Iraq, Kuwait, Oman, UAE, Qatar, all of these are based in the Middle East.
Essentially, yeah.
The other sort of issue that keeps the markets on edge with regard to the Middle East is there's definitely one, potentially two crucial choke points,
Right.
through which all of the oil that I talked about flows through. Now, what happens when we talk about a choke point is essentially it's a very narrow waterway. So should
Right.
any kind of hostilities break out, any country, in this case, Iran, sitting very close to the Strait of Hormuz, which accounts for about, 20 million barrels per day of oil
I believe it's about a
flows.
fifth of the world's oil supply.
Precisely.
Yeah.
And on the other side of the Arabian Peninsula, you have the Bab el Mandab Strait at the mouth of the Red Sea, which is very close to Yemen and the Houthi rebels of Yemen. So you have this region, which is the world's single biggest concentration of oil and gas
Right.
production, and is geopolitically unstable and has these flashpoints and has this conflict between Israel and Iran, which has been going on for decades.
You talked about how the Middle East concentration makes up about 40% of global supply.
About a quarter.
About a quarter.
OPEC Plus is about 40%.
Right.
Yeah.
Who makes up the rest?
Okay. If you look at the big producers in the rest of the world, and thankfully, relatively politically, geopolitical stable places, okay? The US today is the single biggest producer in the world. It's not Saudi Arabia, it's not
Okay.
Russia. So today, the US pumps about 13.5 million barrels per day of oil.
Wow.
Canada
Right.
is also a major producer.
Okay.
And then you have a bunch in South America.
Okay.
Venezuela, which is a member of OPEC Plus, but you have Brazil and Mexico, which are not members, but also major producers.
What about China? What about in Asia?
Asia used to be a much bigger producer than it is now. So the main producing regions, of course, Malaysia and Indonesia. You mentioned China. It's interesting. So China produces, give or take, about 5 million barrels per day. The reason it doesn't get talked about much is that China needs all of its oil production and more.
I see.
So China pumps about 5 million barrels per day. It imports close to 11 million barrels
Oh,
per
wow.
day.
So not even
Yes.
enough for domestic consumption.
Nowhere near.
Oh, right.
And that is pretty much the story of Asia and Southeast Asia and Australia, that all of these are basins that have been producing oil for a long time,
Right.
for decades. There haven't been any major new discoveries. This region contributes to the biggest demand growth globally.
For sure, yeah.
So it is a very interesting dynamics here. Declining production, no new discoveries, demand leaping ahead. So this region is actually very, very import dependent, going to become increasingly more so. And as a result, also very vulnerable to shocks in the Middle East.
So therein lies the question, why exactly are oil prices so sensitive? I mean, since it's a necessity, why can't it be fixed?
A lot of commodities, very important commodities, including like coal and metals until very recently have traded on a fixed price basis. So what we mean by that is the major producers, major consumers get together and say, okay, for the next 1 year
Right.
or 5 or 10 years even, this is how we're going to trade on the basis of this number, right?
Right.
Now, what happens is if there is more demand and less supply,
Okay.
which needs prices to go up to incentivize more production, that wouldn't happen. So essentially, in a fixed price regime, the market is highly inefficient in that any signals of oversupply, more supply and less demand,
Right.
which should depress prices
Right.
and prompt producers to curb production to
Correct.
restore the balance.
Right.
Those signals are absent.
We go back to what's happening in the Middle East and how there's a conflict there, right? Now, when there's a conflict, the first thing we tend to look at is oil prices because that's almost always the first thing to react, apart from stock prices on Wall Street. Why does this happen? When should we really worry about oil price movements being too far up or down?
Whenever a conflict breaks out, so I think taking Ukraine and the Gaza wars would be a good example, sort of compare and contrast them. So in the case of the Ukraine war, Ukraine is not a producer, not a major consumer, but Russia is, right? The third largest oil producer, major exporter of crude and refined products. Whenever a conflict breaks out, the first thing the oil market looks at is this likely to impact oil supply?
Oh, okay.
If there is a chance that it could disrupt oil supplies, then we're going to have some sort of a disruption, shortage, all the way from it's a spectrum. Some shortage all the way to a major supply shock,
Right.
which means oil prices are going to go up. When that happens, typically that's a signal for producers and buyers. The problem is that buyers and producers need time to adjust to any price signals.
Right.
Okay, so the immediate response has to be what are we going to do if you're going to lose 5-7% or whatever of our supply overnight? If we are to live with higher prices, that is a huge blow to the global economy because oil powers everything. For the layperson, you identify it as, what am I paying for my taxi fare because the taxi is buying fuel,
Yes.
diesel or petrol or whatever, or I'm putting it into my car, or what am I paying for public transportation? A more sort of unseen part of oil prices percolating is all our goods are moving on public transportation, right? So it could be cargo planes, it could be trains, buses, public transportation for people, but trucks and so on.
Right.
So high oil prices percolate into every part of the economy and cause inflation. That worries then in turn central banks as well. Now, when inflation happens, typically then central banks tend to raise interest rates.
Right.
That means you and I have to pay higher for our mortgages, for our car loans, or corporates have higher borrowing costs.
Yes.
They tend to then hire less. They tend to cut costs.
Yes.
So the corporate world suffers, the individual suffers. So high oil prices can be a major shock. So which is why the world is so sensitive to any signs of disruption in oil supply.
That is quite the domino effect that I think many of us don't immediately think about. What do we as consumers need to worry about when prices turn volatile?
So as a consumer, your costs are going to go up. Unless it's a case like what happened over the past couple of weeks, it was a quick spike in oil prices and a quick dive, which didn't worry too many people. But had it stayed that way higher or continued going higher, God forbid, if there was an actual supply disruption, then the consumers would have been quite edgy. Then they start saying, okay, now my fuel costs, my electricity costs are probably going to go up. Where can I save? So that is also a hit for economic growth, because if consumers are buying less of other products, whether it's durables or perishables, that's not good for the economy. Governments worry, especially in major oil importing countries, which is most of this part of the world, Asia, because the consumers buying less is going to be bad for the economy.
What about if we are savvy investors and we happen to have oil or we're thinking about having oil in our portfolio, what would you advise there?
So, first and foremost, a word of caution. The thing to keep in mind with regard to oil, so you could be investing in a lot of derivative products. So, of course,
Right.
there's oil-related equities,
Sure.
oil and gas companies.
Right.
There's a lot of products which I would say are highly sophisticated for your average layperson investor.
Okay.
So you have options and futures that you can trade
Okay.
in crude and some refined products.
Right.
You have what is called exchange-traded funds
Yes,
and
ETFs.
exchange-traded notes, ETNs, which basically they don't buy or sell on your behalf, but they're tracking the oil price. They're tracking what futures are doing.
Right.
But quite often they can throw a curveball at you as well, and especially in volatile times, like what we've seen over the past 2 weeks. You might just read maybe some social media and people are saying, oh, crude is now going to triple digits. And you say, oh, this is buy.
Yeah.
Imagine if you were a buyer at $78 of Brent futures, you would today be sitting in deep in the red. Okay, simply because you followed some voices that were saying that, Iran is going to close the Strait of Hormuz.
Yeah.
And you didn't have any independent, reliable research, or you weren't, unfortunately, able to go to the people who know and who know better than to say that the strait will be closed.
Correct.
So there is a risk of getting burnt much more in oil. I would say investing in more passive, in mutual funds
Okay.
that are exposed to commodities, or are either mostly commodities or have some funds apportioned to commodities. I think that's generally a good idea. Unless you have done a lot of research yourself, don't jump into being an active investor in oil.
I think those are very wise words indeed. And there you have it. We've made the connection between oil prices and what happens around the world. Thank you for being our Money Talks Explainer, Vanda.
Thank you for having me.
Do you have a finance thing that you want explained? We are your people. Send us a note, and if you want some answers, send an email to cnapodcasts@mediacorp.com.sg. Thank you for listening to Money Talks. This is Money Talks Explains. I'm Andrea Hing.